Insurance can be incredibly boring until it's not. And then it is very exciting for all of the wrong reasons. This week on the Saskatchewan Real Estate Podcast, we're joined by Declan O'Reilly, and Declan is going to help explain why condo and townhouse owners are in massive danger by being underinsured, and it could cost them thousands of dollars. Hope you enjoy.
This is the Saskatchewan Real Estate Podcast.
Hello and welcome back to the Saskatchewan Real Estate Podcast, your home for all things Saskatchewan, all things real estate, a really great resource if you're a first-time home buyer, if you're a beginner investor, or if you just love real estate and Saskatchewan. If you like content like this, make sure to like and subscribe. And I've been thinking about this episode for a really long time, and I'm really happy that today we have Declan O'Reilly with O'Reilly Insurance and Financial Services. Declan, thank you so much for coming on today.
You're welcome. It's a pleasure to be here.
Give us a background of how one gets into insurance, and I guess specifically your story, Declan. Just give us a brief intro of your history in the insurance industry.
So in a previous life, I worked for a company called Pitney Bowes. I was a sales and service manager. I met a gentleman by the name of Kevin Hunter, and he worked for Sun Life. And he saw something in me and said, you would be good in the insurance business. So 27 years ago, I started my career with Mutual Life of Canada. From there, I spent 10 years. And then in 2007, I purchased O'Reilly Insurance and Financial Services. So my office is one of the cooperators stores in Saskatoon. And primarily, we do property and casualty, which is home insurance, tenant insurance, condo insurance, farm insurance, business insurance. I also have two people in the office who do life insurance and investments as well. So pretty much anything to do with insurance we can do.
And one of the nicest offices for the sense of giving people a really hands-on take. Being a customer of O'Reilly Insurance, I've really loved how you guys have a really hands-on approach with everyone. So aside from that, I really, if anyone is looking for a good detailed quote and really good personalized service in the Saskatoon area, highly recommended. But today's topic, not only do we want to pick your brain about insurance, Declan, but also talking about condo insurance and why current policies might not be adequate for someone who's simply relying on their condo board's insurance policy. Before we get into that, just give me an overview of why the heck does someone need to get insurance in the first place, and give us an overview of why it's an important factor.
Well, one of the reasons people buy insurance for their condo or for their home is because the bank or their lender is telling them to buy insurance. So it's not possible to have a mortgage and not own life insurance, it's not possible to have a mortgage and not own property insurance on the property you have the mortgage on. So begrudgingly, people will buy insurance because they'll say, well, the bank is telling me to do it, or the credit union is telling me to buy it. But that's not the reason why you should buy insurance. The reason you buy insurance is to protect your stuff. You work very hard to buy your house, to buy your furniture, to own your stuff, so you should protect it. And when you buy insurance, basically what you're doing is you are transferring the risk from you to the insurance company. The one thing I would say is that I'm going to talk in very general terms about insurance. If you do own insurance, or if you are considering buying insurance, you need to have an in-depth conversation with your insurance provider. Every insurance policy is a little bit different. The basic policy that we sell, we're all the same, but there are some differences when it comes to sewer backup or flood or deductible buy down or whatever, there are differences. So as good as it is to listen to me talking about insurance, it's really important to have this conversation with your insurance provider so your particular insurance, you properly understand it.
Awesome. And one of these great follow-ups to kind of go into it is one thing you should be chatting to your insurance provider about is condo insurance. So if you own a condo, a townhouse, would you say anything with something like a homeowners association, Declan, would fall under this category? That if you have a policy where the condo board has an insurance in place, it might not cover as much as you would like. And we've had previous discussions about this, but please let's elaborate on this conversation about the importance of following up with an insurance provider to make sure you're properly covered if you own one of these types of properties.
Unfortunately, we run into clients or potential clients who have sold their house and moved into a condo, and they've paid cash for their condo. And so there is no external organization like a lender or a bank, mortgage company, encouraging them to buy insurance. So quite often, people who own condos do not buy the proper, do not buy any insurance. They don't buy a condo policy. Condo corporations' policies are very, very good at protecting the building, but that's about all they protect. And in some cases, they don't even protect the building properly. So there could be underinsured, there's gaps of insurance. So I'll give you a couple of examples. Um, Sewer backup. Uh, well, let me take one step back from that. Primarily, what you're protecting is your financial interest in the condos. So your contents, improvements and betterments, any upgrades that you've made to the unit. But you could have $120,000 worth of furniture and computers and electronics and different items that you own. The condo corporation policy will not extend to cover any of those items. They're your personal property, and you have to buy insurance to properly protect those items. But there's a lot of other stuff as well. So people who buy a condo may buy a townhouse condo, for example, and do renovations to the basement. Those renovations belong to you. They do not own to the condo corporation and would be protected under an insurance policy or a condo insurance policy. The one thing that we're seeing a lot in the industry at the moment is condo corporations, the insurance policy that they have for their building, the deductibles are increasing at an alarming rate. So when I started in this business 17 years ago with cooperators, a typical deductible would have been $5,000. And items like flood, sewer backup, quite often have their own separate deductible. What we've seen is those deductibles now increasing as high as $50,000 and sometimes higher. So in other words, if there is a problem in the unit, um, the condo corporation's deductible is $50,000. If the condo corporation deem that you are responsible for the damage that happened, so it could have been a water leak, water rupture, could be sewer backup, could have been a fire, could be smoke damage, they can make you responsible for that deductible. So they can come knocking on your door and say, we've had damage, we're making you responsible for the deductible, and they're perfectly within the right to do that. So now you have a bill for $50,000. I don't know about you, but I don't have $50,000 sitting in a closet somewhere waiting to be used, you know. So
If you do have $50,000 sitting in your closet, that should also maybe be insured as well. Let's back it up just a little bit, Declan. For the layman out there, what does deductible mean? And in the insurance world, like why is there a deductible? And just walk us through the kind of path that we go through when an insurance claim is put through.
So a deductible is your portion of the loss. So in all insurance, there is a deductible. So when you have an accident in your vehicle, SGI have a $700 deductible on your plates. In your home insurance policy, you'll have the deductible anywhere from $500 to $1,000. So all insurance is a shared agreement between two people to take responsibility for the loss. And the deductible is the insurance policy owner's portion of the loss. So it's very, very unlikely and unusual to see a zero deductible where the insurance company is totally responsible for the loss. So it's a shared responsibility. It's a shared agreement between the insured and the insurance provider.
If someone owns a property like this and they kind of unknowingly assume that, well, the condo board has insurance in place, I don't need to worry about it. I know nothing about deductibles. And one day something happens and it's deemed that I'm at fault for the reason for the insurance claim. What happens if I don't have the funds available to pay this deductible? Are there some scenarios that play out as I, the homeowner, could put me in real hot water in owning a property like this without the proper insurance?
Well, the damage has to be fixed. And when you're putting in an insurance claim, it's not for something that's imaginary. There's actual physical damage. So either there was a fire, smoke damage, water damage, sewer backup, a flood, any one of other things that could have happened. At this time of the year, on home insurance policies, we do see an increased um, ice damming claims, which is caused by ice melting and then refreezing and then melting again. And if your attic isn't properly um, constructed, I'm not going to say insulated because it can be insulated, but not insulated properly. And if it's not insulated properly, it could cause ice damage problems. But if somebody has to come and fix something, you're going to end up with an invoice and you're going to end up with a bill. And the in construction people that repair the damage, they need to get paid. And if the condo corporation pays for the damage, they'll want their money back. So you end up in a situation where you owe somebody a lot of money. And the nice thing to do is to have the insurance company, where you phone the insurance company, and you put in a claim, and the claims department for that insurance company will take care of everything for you. So let me just add something here that's very, very, very important, and it does get overlooked. And I'm very surprised that a lot of clients will come to us looking for insurance without first reading the condo corporation's bylaws. And the condo corporation's bylaws will usually outline what the condo corporation is responsible for, what the unit owner is responsible for, what the deductibles are, um, what processes are used when there is a claim, especially if there is a claim that is less than uh, the deductible that the condo corporation has. Quite often in condos, there's common areas. There is other things that might be like there could be a games room, there could be a swimming pool, could be storage sheds, there could be storage units in the basement. So you need to understand your own bylaws, and those bylaws should be made available to you by the condo board. So, not to make things even more complicated, but there are two different types of condos. There's what we refer to as strata, and then there is Berland strata. Strata, usually the building is covered by the condo corporation. But Berland strata, the individual unit owner is usually responsible for their own building. So we have had clients come to us where their strata is as a legal entity, it's set up as a Berland strata, and they don't realize that they are actually responsible for the building that they're living in and insurance on the building that they're living in. So there's another reason why you need to make sure that you're reading your bylaws.
As these deductibles go up, Declan, give us an example on the extreme of what a potential deductible could look like. What's the highest you've seen that might shock someone to say, I had no idea the insurance deductible would be X amount of dollars?
So in a typical condo corporation, the building will have one deductible. Uh, Water damage, which is typically described as water escape and water rupture, will have its own deductible as well. Flooding will have a different deductible, and sewer backup will have another deductible. So you can have four different deductibles. So the highest one I've ever seen was actually in Alberta, and the deductible for sewer backup was $75,000. In Saskatoon, the highest one that I've seen is $50,000. So very, very recently, we had some of our clients that live in a particular condo corporation receive a letter letting them know that the insurance provider for the condo association was increasing the deductible to $50,000 for water escape and rupture, sewer backup, and flooding. So, in a situation where there is a claim and the condo association deems that the unit owner is either partially responsible or fully responsible for that loss, the condo corporation can ask the unit owner to come up with some money. The other situation is if the condo corporation itself was negligent and didn't renew their insurance policy, what do you do then? Your building burns to the ground and the condo corporation, for whatever reason, a change in board members, a misunderstanding, shopping the market at the wrong time. For example, the renewal could have come and gone and said, well, we're not going to renew this policy. So what we're going to do is we're going to get competitive quotes, but it's past the renewal date. Their previous insurance provider has no responsibility in a situation like that.
Someone watching this, you're probably scaring the pants off of them with all of this. So there are a few different things, but let's boil it down to a few action steps that whether you're looking to buy one of these properties or maybe you own one, and this is the first time you're kind of learning about the intricacies of condo insurance, what are some things that you would do? Is it number one, understand bylaws? Number two, understand the different policies that are currently in place? And then number three, speaking to someone like yourself to making sure proper insurance is put in place to cover off the first two?
I just talked to a client yesterday, and the two things I asked them for was a copy of the bylaws and a copy of the condo association's policy. And when I have those two things, it answers a lot of questions for me in terms of what insurance the client should have. So if you are buying a condo and you're going through the process with the real estate agent, tell the real estate agent that you want a copy of the bylaws and you want a copy of their current insurance policy. And no board should be reluctant to provide those information to you unless they don't have the information, and then they should go and get it. But once they have that information, they can give it to their insurance provider. Insurance provider can have a brief read of the bylaws, will be able to tell very quickly the type of condo corporation, the type of um, coverages that the condo corporation will have, the responsibilities on the unit owner. And then when you look at the policy that they have for the condo corporation, the advisor will be able to see what limits should be in place. The other thing that you should do as a unit owner is do an inventory of all the stuff that you own. A lot of people will come in and they'll say, I need $20,000 worth of coverage for my furniture. $20,000 will not go a long way to replace a couple of beds, couches, electronics, and any other items that you might own. And the other thing that you have to be aware of is that some items have very specific limits. So things like jewelry, antiques, artwork, business tools, those items have limits within the policy. So you have to know your stuff, know what you own. Yeah. So I always tell people there are no such thing as a bad insurance company. There are bad brokers and there are bad insurance reps, or perhaps maybe undereducated insurance people. Um, but insurance companies, all an insurance company wants is a fair opportunity to underwrite the risk. And if they're given all the information, they will give you the proper policy with the proper coverages. And as a consumer of insurance, you have every right to ask questions. So ask, and don't get overly complicated in the questions that you want to ask. Ask what happens if, like, what happens if all my jewelry gets stolen? What happens if there's a sewer backup? What happens if my toilet bowl breaks and floods the unit below me? What happens if the guy above me has a flood and destroys everything in my unit? You know, so ask what if situations so that you get an understanding in layman's terms of what the policy is all about. Every policy also has a policy booklet. So you'll get a copy of the policy with all the wordings, go through it and see if there's anything that you don't understand and ask the question.
Wonderful. That's excellent advice. Just as we're kind of wrapping it up here, Declan, if we could kind of wind it back to your personal situation. I really like to ask people this question when they come on, just because we always get fascinating answers. But if you could go back to a younger Declan, what advice would you give yourself? And just give us a brief explanation of why you'd give that advice.
Well, I would have gotten into the insurance industry earlier. You know, it's one of those industries where you can't really go to college to become an insurance person. Most insurance companies train their own people, whether it's Sun Life, cooperators, um, SGI, you know, through Cherry Insurance. Hate giving a plug for SGI, but um, so anybody who works in the insurance business basically may have had a university degree, may have had high school, they get hired, and pretty much all the training they receive is from the insurance industry. And we do a really good job of training people. But I would have gotten in sooner. I love this industry, love the work that I do, love my clients. I tell my clients, I tell my staff that we are not in the insurance business, we're in the customer service business. When people walk through the door of an insurance office, they're quite often tense, concerned, afraid. I'm going to steal from them. I'm going to give them something they don't understand. We're in the business of helping people navigate through insurance and what insurance is all about and finding the proper solutions. And we also have oh, sorry about that. We also have a philosophy in our office is that the customer is not always right, but the customer always deserves to be treated right. And that's what we try to do at O'Reilly Insurance.
I really like that. And on that, Declan, if someone wanted to get a hold of someone from O'Reilly Insurance, they're looking for maybe a quote on a condo, townhouse, or maybe someone who's just willing to take them through their insurance policy, how can they get in contact with you folks?
Um, we have an amazing receptionist. Her name is Haven. And if you phone her at 306 934 7331, she will direct you to the person that's most appropriate to look after you.
And do you guys service just Saskatchewan, Declan? What is your range of communities and folks that you'll help out?
So at the moment, we're fully licensed in Saskatchewan and in Alberta, and we're in the process of being licensed in Manitoba.
Cross-provincial. I love it. Declan, thank you so much for all of your wisdom and your enthusiasm for insurance. Much like mortgages, it's not really the topic that you want to bring up at dinner, but it's really special to have people who are passionate about their industries. And I always really appreciate that about you. So thank you for coming on and sharing about insurance. I really appreciate that.
Very good. It's been a pleasure.
Thanks for checking out this episode of the Saskatchewan Real Estate Podcast. If you found some value here, make sure to like and subscribe to never miss a future video. If you are in the market for a mortgage in Saskatchewan, a purchase, a renewal, or refinance, please reach out to me. I would love to be a second opinion or help guide you through the process, especially at renewal time. We all know that the banks are not in your corner when trying to save you money. So when they send you out that renewal letter, do not sign on the dotted line. Please give me a call. Let's see what the rates are at that time and see if moving could save you thousands of dollars. Until next week, I'm Ron Caroni, your Saskatchewan mortgage professional. Bye for now.